and then we can make a start. We're running slightly behind, and we'll see how we go. But we have an interesting topic with an excellent group of people to discuss it, and I'm intrigued by the topic: the greenies, the do-gooders, and religious fundamentalists, addressing popular perceptions of responsible finance. And I think if there were a poll question, and I'm not suggesting we do one quickly, is you have to spot which one is the greenie, which is the religious fundamentalist, and who are the do-gooders amongst us. But I'm going to try and frame this as constructively as I can in terms of perception or perhaps misperceptions. About 10 months ago, I was asked to deliver a keynote address at the Global Insurance Symposium in the United States. And with apologies to the Americans in the audience, the only thing that was global about it was me. And my name is Daud Vicary Abdullah, and I've been asked to give a keynote address on the subject of takaful, Islamic insurance. And I hesitated about giving this keynote address, and certainly with my name, and most people in the US not knowing who I was, and the subject of takaful, I decided to entitle the address More Similarities Than Differences. So there's a bit of a mystery element to this. And I then proceeded to make a presentation that was based on the similarities between takaful and mutual insurance. And mutual insurance, everybody who's familiar with, and 5 out of 6 boxes I was able to tick in terms of similarity. The only difference was the fact that surplus funds needed to be invested in a Sharia-compliant way. I then also described for the audience research that had been done in North America by the Pew Institute, which had indicated post-crisis that premium growth into mutual insurance, which by the way looks like takaful, had grown at twice the speed of premiums into conventional insurance. And the third piece of evidence that I gave was that the Muslim fraternity in North America was the second fastest growing group in terms of not numbers but affluence. So you had a marketplace there. So all of a sudden 500 CEOs and regulators in the US got a perception of Islamic finance which they'd never got before, and I was really quite a popular guy, even though my name was Daud Vicary Abdullah. But a lot of people said, well, you don't look like one. Okay. So there was a perception issue there. But I did get one question from a lawyer who said, we can't have Sharia law here. And he seemed to be quite hostile to that. So I calmed him down slightly by saying 2 things. One was what type of lawyer are you? He said he was a trust lawyer. I said, what's the basis of US trust law? And he said, English common law of trust. And he thought he'd get a big tick in the box from me for that because I'm English. And I said, yes, you're absolutely right. But do you know an early example of a trust in English law? And he said he didn't. And I said, well, 1264, the foundation of Merton College, Oxford, the first college at Oxford, was founded on a trust which was based on the Islamic concept of waqf. So you have Sharia law. And I said, in addition, what's your understanding of Sharia law? And he said, oh, people get their hands chopped off. And I went, oh. I said, well, it's not quite as simple as that. It's actually the concept of halal and haram. Halal is something which is good for you. In other words, it's ethical, it's actually healthy, it does you no harm, and if you take it to another level, it is actually beneficial. And on that basis, I'm going to start this conversation and get everybody to spend 2 or 3 minutes, perhaps with an anecdote or perhaps some story about what they've been doing recently to indicate what we're up against. There's a lot of misperceptions, and that's just one example. So, Abdullah, similar story or in your role, I'm sure you have plenty.
Thank you, Daud. I'm afraid I can't compete with your story, but you do raise an important point, which is the point of perception. And if I may, perhaps draw a comparison in terms of how that perception is affecting, the way that we do business, and quite specifically in our organization. If you allow me to be a bit selfish here and talk about the Dubai Islamic Economy Development Center. is because even in our organization, we've been faced with that confusion, misperception, if you want to call it, or if you want to define it any other way, feel free to do so. But it does exist. It is real. In our point of view, not only limited to the Islamic finance domain specifically, but across the spectrum when it comes to the Islamic economy sectors, the halal sector, the Islamic design, if you will, and fashion and other sectors as well. So it is an issue. And in our point of view, when we first started with this strategy, His Highness Sheikh Mohammed bin Rashid Al Maktoum, the UAE Vice President and Prime Minister, announced the vision in 2013. And at that time, the intention was to work alongside stakeholders and other jurisdictions to really develop the various sectors of the Islamic economy. Starting on launching various projects and initiatives, we realized that there is a bit of more awareness that we need to do when it comes to explaining what the term Islamic economy refers to and what are the sectors that fall into it. We've been ironically faced with confusion even in jurisdictions where we felt that those sectors and products and services would be quite easily understood and received as well, but it wasn't the case. Even the term itself, the term halal, you referred to, and you defined the term halal in a way that I don't think a lot of others would necessarily define it as such. Each has his or her own interpretation of what halal is. And I risk perhaps giving an example that is not in the Islamic finance domain, but more on the halal food domain. We have come across jurisdictions where they question the concept of certifying halal products, and why do we need to certify products as halal, given the fact that the term itself refers to what technically is compliant with the Sharia in terms of, for example, the cow being slaughtered in a clean manner, etc. That's what defines it as halal or not. They don't go beyond that definition to specify what does have a good impact on the health of the consumer, if the product itself is healthy, if it doesn't have any artificial additives added to it, how the product is transported, how it's developed from the farm to the table. They don't necessarily address that. So I think similarly in Islamic finance there is that misperception as to what really is compliant with the Sharia, but even beyond that, how is that product or service benefiting the society and the end user as well.
Okay.
So,
Abdullah, thanks for that. So we start, it appears to be building a consensus that education is required, and there's some, there are misperceptions, and we've got quite a bit of work to do to move forward. I'm going to move now to Hasan and your role at SEDCO, which is a UN PRI certified or ratified organization. Your perception of this in terms of what it represents to you to be responsible and ethical and also Sharia compliant, because I think you're doing all things. But your definition and your experience in this marketplace, I think that would be helpful, because you're a practitioner, you're doing this stuff, and you're running a fund which is doing it.
Well, thank you very much, Daud. Actually, just to give a little bit of background, we've been Sharia compliant investors for many, many years, and we've applied all the Sharia guidelines and standards. As you said, there was a lot of misperception. What is it exactly when you go outside the Islamic world? What does it mean? And especially that we're quite global in our investments through different asset classes. When we saw a few years ago the UN Principles of Responsible Investing, the 6 principles, we found that it tallies very well with Sharia investing, especially both are drivers of economic sustainability for future generations. When you looked at their negative screens, it was exactly the same negative screens that Sharia had, no gambling and all the other, no alcohol and so on. So that played a major factor. And so we looked at really what are the differences. And the differences were the prudence that Sharia gave, which is practically the financial ratios. And we don't sell something that we don't own. We don't buy into products that we do not understand or that may cause risk to the environment or to the economy where you're working. So we thought that would be a fantastic way of integrating the additional stuff that ESG may deliver within our process. By integrating that and creating the prudent ethical investing, which is combining both, okay, this way when we go anywhere globally, we're much better understood. And recently, actually, we were on a roadshow visiting 87 sovereign funds, pension funds, institutions that manage over $2.7, $2.8 trillion. I told my guys, let's try by just talking about Sharia to start with. Immediately, the reaction was, we're not Sharia investors, you're taking us, you can feel you're taking them out of their comfort zone. What we said instead, in the other 85 meetings, we said, okay, we're prudent ethical investors. So you find, what does that mean? And when we went into our process, what it is in terms of the standards, the criteria, the measures, the practices, they loved it. On the contrary, rather than on the Sharia, they were a little bit taken back. It's not me. Here, you're giving them the same thing, however, talking their language and their logic, and it made a lot of sense. So really, that's the most recent experience that we've had.
So that really is embodying, speaking to the audiences listening. So if I go back to my example, it was good that I didn't say, Tuckerful to start with. They were a bit worried about my name, but I think what you're saying is it's all there. It's just how you tell the story, speaking to the audiences listening. Julie, you're also a practitioner, but you probably come at this from the other angle because you're not an Islamic finance person, but you're an ESG or ethical or responsible. Your take on this and the examples, I mean, you're running an enormous fund as well at Franklin Templeton. Misperceptions, do you come across these?
Yeah, I think it's fair to say that in addition to there being continued misconceptions, it's actually fundamentally an educational gap that continues to exist in this area. So anecdotally, you asked for an anecdote. When I tend to introduce what I do, both professionally and personally speaking, I'll get a range of reactions from glazed eyes to an immediate assumption that I'm involved in green financing alone, environmental financing. And really, there is also this notion of trade-off in terms of performance impact. And really, when you get behind that, it's actually linked into the notion of exclusions and screening, and that by being a sustainable and responsible investor, it universally means screening the investable universe and shrinking the alpha opportunity set. And really the approach that we take through the evaluation of ESG is really, it's fundamentally about risk-based investing and the evaluation of both risks and opportunities alongside our traditional financial analysis, and whether these risks are priced in. And it really is, an extension of both effective risk management, but an involvement of investment evaluation. I think some of the educational barriers and gaps are narrowing, but fundamentally there's still a significant deal of work to be done in really kind of bringing the conversations back to economics and financial and broader societal and environmental impact. which I'm sure that we'll get into later. So I'll rein my comments in until later.
Okay, well, time permitting, I hope we do get time. Let's move on to my friend and colleague and brother, Dr. Akram, and we share the same campus, and our offices are about 20 meters away, and we talk often and deeply and profoundly on these matters. But from your perspective as a Sharia scholar, your take on the perception, or perhaps some anecdote, the recent things you've been doing to help bridge the gap in this area.
Okay, thank you very much, David, and thanks to the organizer for inviting me to this session. Now, talking about perception, I still remember a couple of years back, when Osama bin Laden passed away, there was a reporter who called me, asking me, "Doctor, what do you think? What will be the impact of Osama bin Laden's death with Islamic finance?" I was a little bit puzzled, and I asked him, "What is the connection? What do you think? What is the connection between the two?" So he was telling me, "Well, that is the perception. That is the perception that to one way or another, Islamic finance is connected to terrorism and whatnot." And I told him that I believe that, these people who are, doing all these funny things, right? It would be more, rational for them to use the conventional network rather than using the Islamic network, because it will be less suspicious, right, if they are using the conventional network rather than, using the Islamic network. So, that is the true. That is some perception when it comes to Islamic finance and also what is happening in the world at the moment. Now, one thing that I would like to stress here is that when we talk about Sharia as well as responsible finance, ESG and whatnot, we have to understand that if we look into the whole spectrum of Sharia, you see, the ethical, moral dimension is very much embedded within the spectrum of Sharia. That's why when we look into the definition of Sharia, for example, when the scholars define Sharia, one of the components of Sharia is, of course, for Muslim, it is the faith dimension, right? And the second dimension is to abide by the legal requirement of Sharia. In Arabic, we call it the fiqhi dimension. And the third, equally important dimension is the moral and ethical dimension of Sharia, which sometimes, you see, we did not really emphasize on this. Nowadays, people are talking about halal. Well, halal is the very much on the legal aspect of it. Even as a Sharia person, when I look into a transaction, I will look whether it satisfies with the legal requirement of Sharia or not. You see, and I strongly believe, and I'm propagating this, that the Sharia scholars have to go beyond that. Nowadays, people are talking about halal and tayyib. You see, so what is the dimension of tayyib? Whenever a Sharia scholars, let's say, approve a particular product, whether we will stop and look at the legal dimension only, or we should go beyond that, you see, by looking at the impact of that particular product. And I strongly believe that, the time has come, you see, for us to look into the moral, when you talk about ESG, when you talk about SRI and, all these dimensions, it is embedded within the framework of Sharia, in which we should not neglect, all these dimensions, and we have to look into it. Thank you very much.
Thanks, Dr. Akram. I can reflect on that briefly. The point you're making there is that the Sharia scholars are being asked to take it just to the point of a legal definition. So this construct or this contract in Ijara, for example, that's absolutely fine. We pass that. However, what you're saying is they should go to the next level and say, okay, that Ijara was used to lease a bulldozer, a Caterpillar bulldozer, which has now gone off and bulldozed 1,000 hectares of rainforest in Borneo. Now, if you knew that was going to happen, that would not be Sharia compliant. So that's the point you're making there. And I like your Osama bin Laden story. I have one too, and I'll be very brief. 10 years ago, I was asked to meet the Assistant Secretary of State from the US with the US Embassy here to talk about Islamic finance. My name was given, as usual, as Daud Vicary Abdullah, and I turn up not wearing this suit, but certainly a pinstripe banker's suit, because I was CEO of a bank then. And I found these people in the lobby of the hotel at the right time. I was looked up and down, and the answer was, or the first words out of their mouths was, "You don't look like an Islamic banker." And my response was, "Who were you expecting, Osama bin Laden?" So I've got my Osama bin Laden story on that. Anyway, let's get back. Sorry, too much humour. We must get serious. We must get serious about this. But this is an issue. It's a perception, a misperception. I think this question's really directed at both Hasan and Julie, but the others feel free to jump in. It is how do the Islamic finance and the ESG sectors view one another? Is it sort of, it's not obviously not love at first sight, but is there a sort of what's needed to break down the barriers in terms of cooperation or collaboration, or do you think it's already moving in that direction?
I think it's started to move. So what I would say is that ESG investing and any form of faith-based investing, whether that's Sharia-compliant funds, they are distinct. However, whilst they're distinct, they also form part of sustainable and responsible investing. So I tend to think about that term as an umbrella term. And there is a range of approaches and different approaches that all speak to sustainable and responsible investing. And rather than viewing both these approaches as mutually exclusive, there is a compatibility in evolving ESG and adding kind of faith-based investing criteria. And by that, what I mean is one can look at ESG principles as really being that broad-based analysis upon which you can supplement that with specific criteria that really refines the analysis to speak to specific Sharia-compliant laws or any type of other faith-based criteria that there is there. And I think by introducing the ESG lens, what we're actually doing is, one, we're, as investors, evaluating what are the business-related ESG risks and opportunities. Two, what is the impact of those ESG risks and opportunities to the long-term business strategy, operation, and the resilience of companies really to adapt to these ESG changes. And really over time, a lot of these changes can evolve and reshape competitive advantage and sustainability of that company's business operations and ultimately long-term shareholder value creation. And really just to give a tangible example, what was talked about earlier was the COP21, the climate change agreements that took place in Paris in December. And what came out of that was a global commitment from the 195 countries that submitted their INDCs, which is their commitments on how they're going to reduce climate change to below 2 degrees Celsius. And those policies come into place in 2020. Now, environmental externalities are increasingly getting priced in, and it's the extent to which those sectors and corporations that are exposed to that particular risk, how resilient are their businesses to adapt to potentially tightening regulation, to potentially a price on carbon. And adding that layer of analysis alongside traditional analysis really provides that additional insight to try and understand some of what are the hidden risks that lie beneath the balance sheet or financial ratios alone. So if I had to summarize, it really is, whilst they're distinct, there's a compatibility that I think the two lenses can provide to really introduce a more rigor around weeding out those potentially weaker performing companies to those that demonstrate best-in-class performance over the long term.
You highlighted them, before I come to Hasan, and apologies for interrupting, but you struck a chord with me there. ESG appears to have a great deal more data. I mean, apart from the fact it's a larger market, I think Hasan was mentioning in our discussions earlier, $21 trillion, I think, you know, as opposed to a $2 trillion market of Islamic finance assets. But is there a differentiation here? The ESG market has a lot more data and research to sort of back up these decisions compared with the Islamic finance market at this stage. Would you agree with that or not?
What I would say is that the data is evolving. I think the challenge has always been, so to give you an analysis, the general starting point of question is, does ESG have a positive financial impact? The reality is, one, a number of these factors are medium to long term. Two, the data is not as deep or as long as traditional financial ratios. So when you look at financial metrics, you're talking about price return. You're looking at 20 plus years of returns data that you can do back testing to determine whether there's a correlation with outperformance. So in short, my response is, I believe that there continues to be, data challenges. I do think that as there is better disclosure on these ESG risks, supported by initiatives such as the Sustainable Stock Exchange that has corporations having to disclose this information, I think the data is getting deeper, and I think it's evolving, and I do believe that there are insights to draw from that information set for those asset managers that spend the time to understand what that data is about.
Thanks, Julie. Hasan, I saw you nodding your head furiously in that direction, which meant you disagree on the data. But there was also the first question, which was around, are you at different poles coming together on this, or are there more similarities between the Islamic side and the ESG side than we give credit for?
ESG is quite broad. We have to realize that there isn't just one set of standards for ESG. You'll find companies that are focused more on environmental issues, social issues, governance issues, and so on. And each one of them carries his own standards. Yes, there has been NDCs, and there has been now more studies, and as Julie's saying, it's getting deeper and deeper as we go. There's still some room for better understanding of that. But on the Sharia side, it has been there for quite a long time. And really for investors, what's important is for investors in general, you'll find that, okay, some of them are very excited about the ethical and the responsible side of it, but at the same time, they're interested in the profits. How much profits are they making? Is ethical or responsible or Sharia financing taking away from them? And studies have actually shown, not only studies, I mean, look at the Dow Jones Islamic Index and compare it to the MSCI World, and you'll see that during the past 20 years, 12 years out of 20 years, the Dow Jones Islamic has outperformed the MSCI World. And when you take it on a compounded basis for the 20 years, it has outperformed by over 25 basis points on an annual basis. So that's quite a substantial outperformance, and it's there. I mean, you can just look at the Bloomberg's or Reuters screens, and you'll be able to pick up that information. And also, there are a lot of studies that show that following proper governance or proper environmental standards give you a lot of value. For example, we're in real estate also. So when we buy properties, we want to make sure that they have proper efficiency on power, on water, the material that is used. And you'll find that regulations by the governments are going more and more towards that direction because it's better safety, it's better efficiency, and cost cutting for the consumers. So when we want to sell these properties that are environmentally friendly and efficient, we get a better price for it. And similarly, when you're buying a company that is following, a manufacturing company that is following more better standards, you'll find that it has better marketability because these standards are more environmentally friendly, less CO2 emissions, and so on and so forth. So the idea is to be able to more and more communicate the standards and have them more uniform standards and be able to show more the results. Through proper integration of process. I mean, and standardization of process. That's what we hope for.
So a fairly big task ahead of us, I think, in that area. But but a journey of 1,000 miles needs to start with a first step. Abdullah, I've got a question for you, and this is in the context of we heard in the first session, and we've also alluded to it in this discussion, that there is a need for change, and a change to sort of change the objectives of finance to get back to supporting the real sector, you know, for jobs, for equity, for ecology, for the environment, and so on. And in order to do that, values must change. And I think you alluded it to in your opening remarks, in terms of, you know, the perceptions or misperceptions that are varied there. But in terms of driving those values or changing those values, your experience as head of the organization, which is, shall we say, spearheading the Islamic Economy Initiative out of Dubai, what challenges are you facing there? Because it is about just changing mindset, isn't it?
It is, I think, about changing mindset, but the broader challenge, and not only limited to our jurisdiction, but globally speaking, and, you know, I hear my esteemed colleagues here on the panel, you know, alluding to the same fact, is the uptake, you know, when it comes to implementation, when it comes to actually applying those standards or metrics, you know, in reality, in my opinion, you know, there is only one way to go, you know, about it. We can sit and talk about it, of course, panel after panel, and, you know, events after events, but somehow this has to be cemented perhaps in legislations, regulations which are implemented, you know, and mandated on institutions to follow. Otherwise, we will end up having, I believe, our esteemed scholar here in the panel, you know, looking at perhaps products and services, and because, you know, they're not being mandated to, not looking to the effects of those products after, you know, implementation. I think introducing legislation that will require companies to embed these metrics or embed these standards is a must. And to be very honest with you, I don't think it will be that much of a great challenge, because the synergy is there. You know, the synergy between ethical and social financing and Islamic finance. You know, for example, one of the biggest perhaps proof that I can provide was a recent report that was issued by the Secretary General of the UN back in January. It was, I think, alongside the World Humanitarian Summit, where he highlighted that the funding gap, you know, for humanitarian action, humanitarian aid, which I think stands around $15 billion US, could be met by Islamic social finance. And he said that because I think there is synergy between Islamic finance and ethical, you know, activities and financing. So there is no doubt, I believe, on that synergy. Perhaps maybe the next step is to lobby and ensure that governments introduce legislations that will require institutions to follow those, you know, those codes and implement them.
I'm inclined to share your optimism, but of course you mentioned the word lobby there. You're going to come across certain lobby groups who are going to be in conflict, so we better have a story together. I've got one more question, and then I'll prepare the audience. We're running up to lunchtime, so it's at your discretion. The more questions, then the later lunches, I suppose. But we're trying to keep to some kind of timetable here. But a final question, I'll direct this at Dr. Akram first, but anybody else can chip in, is media, and apologies for members of the media in the room, this is not directed at you personally, but how does media perception of responsible finance, and indeed, in particular, Islamic finance, affect our ability to expand from the current levels? And I'll start with you, Dr. Akram. Just briefly comment on that. Is this an issue?
Yeah, I think, you know, the way how media, I mean, portray things, I mean, is very important, because I think when you talk about the perception, I mean, what effect, you know, the perception of the people, mainly it is media. Nowadays, I mean, I think we are exposed not only to the conventional media, but also we have the social media, and we have a lot of means that is being used. And I believe that, I mean, all this, you know, will shape the way of thinking. I mean, will shape the way of, I mean, how people perceive. If you're talking about Islamic finance, I give the example earlier on. You see, if media have given the correct interpretation, you see, but when media start blowing, like what is happening in Brussels and whatnot, you see, I mean, when media start focusing on this kind of people who are doing harm to Islam more than benefit, you see, as if we are trying to create the perception that each and every Muslims are the same. You see, and that, of course, it is not correct. I mean, that kind of perception is not correct, whereas you have the majority, okay, and Islam itself does not propagate, I mean, this kind of action that these people are doing. So these are kind of things that I believe that, I mean, a responsible media, I mean, should report the correct thing, as well as does not blame Islam, does not blame the whole entire Muslim community just because, you know, a minority segment of the society is doing such kind of things.
Thanks, Akram. Abdullah,
No, I agree with Dr. Akram, absolutely, in terms of the media having, you know, an important role to play. But I will add, and I will just add and say that yes, they do make the difference. I mean, if allow me to be selfish again, but within our when we launched our strategy back in 2013, on the sectors of the Islamic economy, the media played a very important role in sharing that story. Sharing that story with the world actually generated interest. You know, generated interest in the tenets of Islamic, the tenets of Islamic economy and the values of the Islamic economy, and why is there potential, why is there business potential, you know, alongside those sectors. It was all because of the various reports and the journalists that covered, you know, that strategy and highlighted the advantages of you know, entering that industry and what potential that provides. So that's how I think media could be used, you know, in my opinion, to share the good, you know, side of
David, just a small comment. We talked a little earlier on about the standard. I mean, if you look into the Sharia, I mean, there is this maxim, our principle, which says Jalbul Masalih wa Dar'ul Mafasid, meaning that whatever that bring benefit and prevent harm, it should be propagated and should be part of Sharia. When we talk about ESG, we talk about, I mean, all these good things, you know, that, I mean, these are the value that is shared across the faith. I believe that, I mean, the Muslims share the same values. I mean, the other faith also share the same values. So these are the common ground that we can work together, and to a certain extent, I mean, we can agree to some sort of standards when it comes to this kind of thing, and I think this is wonderful.
More similarities than differences, and I'm sure we could discuss this for a lot longer, but you know, time is preventing us there. But it really is an issue, again, speaking to the audiences listening, but getting that engagement to get, you know, off first base, as it were, and to have a more engaged discussion. We're running up against the clock, but I would like to open the floor to questions. So do we, there's a lady back there and there's a gentleman towards the back over there, and we'll take a third one, and we'll try and handle all of them. So there's one, two, and is there a third? There is a third. There's a lady back there, and I think that's probably enough. So I think, is it Jessica? My eyesight's not so good. Hello, Jessica.
Hello. Hi.
If you could just introduce yourself briefly, who you are, where you're from, and a brief question.
Yes, my name is Jessica Lau. I've been doing private equities for 6 years. And recently I just came back to Malaysia to study Islamic finance at INCEIF. And one of the things that was brought up in the panel, I'd like to acknowledge first that your panel is a good mix of researchers, developers, and researchers. So I'm actually looking for 2 points of views here. I would like to acknowledge 3 key phases. One is brought to you on the focus of change. What is it that we need to focus on to change? Secondly, you say it's decently easy to get the involvement of legislation and regulators when we want to implement this change. And the third thing is about balance sheet and ratios when we talk about finance and accounting, right? So the question is, we all know one of the principles is the amount of risk is equal to the amount of return that you should make. That is one of the legal maxims of Islamic finance. And we also know that fundamentally flawed is the model that we use for investments. What is your take on the capital market pricing model? The capital, in 2013, one of the Nobel Prize for Economics states that there is no real theoretical, real practical model that captures risk and return. So this is our problem, right? The risk is always transferring. The risk is always hidden. And if we were to propose an idea of measuring risk, and risk is very real for business, right? We need risk to, in order to operate, and therefore one of the principles. So my question is, what if we did implement risk on the balance sheet as an intangible liability? And how practical it is to, in terms of like actually monetizing that. If you can recognize loan, why not recognize risk? If you can recognize shareholder equity, why not risk?
Okay, thanks.
Thank you.
I mean, there were three questions there, and the last one probably needs a seminar of about half a day to get into pricing theory and pricing models, and also probably a big debate on how interest rates are set as well. But let's try and tackle that very briefly. I mean, I think in summary, what do we need to change? And there's probably a one-word answer. What would you focus on that we need to change here? And in particular, I think the second part of the question was about regulators and regulation. I'm not sure we can give an answer to the capital markets pricing model, but unless Julie's looking at me, she probably has got a one-word answer to that. But why don't you start?
Yeah, I mean, I studied quant and economic finance, and my view on things like the CAPM or the asset pricing model, they're models. They're based on assumptions. They're based on markets being rational. The reality is markets aren't rational. You throw into the mix at the moment geopolitical tensions, and these models, as with anything, one needs to understand the assumptions and provide a qualitative overlay. And I think to the point that the lady was making, I mean, what we've done at Franklin Templeton is integrate some means of quantifying these more intangible risks, because one needs to measure risk in order to manage that risk. And as an active manager, you need to take on risk to generate alpha and return. We just want to make sure that we're taking on the right type of risks. And we have developed a proprietary framework that effectively looks at traditional statistical and quant measures, beta tracking error, correlations, alongside these more qualitative ESG metrics to really round out that analysis, which is why I was kind of smiling, because one needs to add that qualitative overlay. And I apologize, the other two questions?
Well, yeah. I've got a way around that, and I'm sure Jessica will understand. We'll do a wrap up, and it was going to be like a one-word answer on what do we need to change, and I'll just do that as a summary for everyone. And the changing regulations, forgive me, Jessica, I'm trying to get a couple of other questions there. Again, I saw, is it Mustafa back there?
Yes.
It is, okay. And there was a lady over there, and we'll take those questions. Introduce yourself, and I hope a brief question.
Yeah, very brief. My name is Mustafa Aydemir. Islamic finance students currently working for Saturna Capital. My question to the panelists would be, how would you see like Islamic finance would fit into the ESG or the responsible finance model, but vice versa, probably not, because ESG or responsible finance has no problem with interest, but Islamic finance does. Maybe you can summarize it.
Okay, a great question. I'll let Hasan, if you don't mind.
Actually, we have addressed that issue through the prudence element. So the ethical side, the environmental, the governance, as you rightly said, it applies for both. However, when it comes to the financial structures and the financial ratios, that's where the major difference is. And that's what we're calling prudence, because excessive leverage, I mean, one of the major ratios in Sharia financing is the leverage. And what we try to do is to avoid excessive leverage. And it has shown, and especially if you look at 2008, what has destroyed the markets was the excessive leverage. So we're addressing it through the prudence. We're saying, look, If you have excessive leverage, if you're selling a product that you do not understand, then the likelihood is that you're going to lose more money. If you're prudent in the way you leverage your companies and your structures, we show that this actually has given better performance. So what you're talking here is to the sophisticated investor who would appreciate that results will come with proper prudence. That's it.
And our final question, there was a lady towards the back who I don't recognize. If you could just introduce yourself and a brief question.
Good afternoon. I'm Zainab, and I'm a graduate student at INCEIF as well. I'm pursuing a master's in Islamic finance, and I'm from India. And considering the endemic challenges that India is facing, I would like to know, how do we really mitigate the geopolitical hindrances that kind of impede transnational collaborations? For instance, when you look at the map right behind on that hoarding, I mean, a lot of countries which in fact represent a lot of the poorer populations in the world are financially excluded. And a lot of the countries which have developed responsible finance indices, for instance, are actually developed countries. So there is this disparity where the unbankable populations aren't really benefiting from the, let's say, the resilience of these responsible stocks, right? So my question is, how do we really, do you suggest that transnational corporations would, number one, be catalysts to bring about more equitable shared prosperity? And also, on the other hand, like Julie mentioned, the research data, the issues with data is that they're really short-term data, and we can't really predict much movements. But they are, social responsible investments are seen to be less sensitive to volatility, right? But how do we translate that, those gains and prevent capital flight, but rather encourage more bottom-of-pyramid benefits from stock returns or real sector integration?
Okay, I'll try and summarize that because we'll push some. I think there are two tiers to this. One is there's an issue about financial inclusion and how does responsible finance address that. But also in certain geographies where there is a lack of financial inclusion and access either to capital or to responsible finance for investment, how do you prevent the capital that is in that country going overseas, where it's going into responsible for investment, but it doesn't come back into the country to improve the situation? It's actually a very good and profound question. I'm not sure we'll do it justice in about a minute each, but who'd like to bat first on this, or just, I think we'll get one of you to answer. Hasan, would you like to go, or Julie? Everybody looks troubled by it because it is a very difficult question for which there isn't a one-sentence answer.
It's a very good, difficult question. I mean, the one immediate thought that comes to mind, and I refer back to the climate change agreements. There's an increasing recognition that, when you look at climate change, whilst the problems historically may have been caused by developed nations, it's the developing economies that still need to grow. And to the point about inclusive finance, there's a recognition that one needs to finance the adaptation of developing nations to finance that kind of climate change adaptation plan. And that's actually one of the key elements that came out of the climate change discussions, that the developed world needs to contribute and commit towards financing, whether that's through adaptative solutions. So that's really my one thought.
I can address it from another angle. Actually, even the developed countries need to start with themselves, and then they will be able to address issues of the world. It's a process. And I think one of the most important processes is ESG is a very important part of that process. And Sharia finance is a very important part because we're driving towards economic sustainability. And by that, like in Islamic finance, we say we want to make profits, yes. However, we want to make profits by adding value to the markets and the economies and the societies where we work. We cannot make profits without adding value. So we don't take interest. We create jobs. Our money should be used to grow companies that creates jobs. And by creating jobs, you're creating the wealth. And also the proper distribution of zakat, how it goes and how it is transferred. So the whole idea is avoidance of greed and avoidance of the products that really destroy markets. So what happens, for example, with the mortgage-backed securities, when they started becoming misused, like, for example, some CDOs or CLOs and so on, when they started becoming misused, not all CDOs are bad or CLOs. However, structures that some people cannot understand, you find that all of a sudden a lot of wealth has been created somewhere without adding any value to the markets at the expense of somebody losing. However, in Sharia finance, you do not make money because somebody else lost. You made money because you have created the jobs, the goods, the economy, you've grown. And as you grow that, then you're able really to demonstrate a more affluent country or a society that is able to support more its neighbors and other nations.
Briefly,
very brief word, Dr.
David, I'm looking at the macro level, you see, how to connect, you know, the different ecosystem that we have in the Islamic economic system. At the moment, we talk about Islamic finance with its different component. It is disconnected with other institutions that is available in Islam. We have zakah, we have sadaqah, we have waqf. I mean, all these institutions can be empowered, and if we connect, all these institutions together, we can come up with a wonderful solution. You see, for example, those who wanted to get some financing from the bank, you know, they cannot provide collateral, so bank cannot give them financing, right? Now, how waqf can be empowered, how zakah can be empowered in order to make those non-bankable segment of the society to be bankable. We need to think about how to connect all this ecosystem in order for us to move forward.
Thank you for that. And I'm going to take that as the answer to my final question, which I'm going to ask is what do we need to change? And I think that was a good example. So Julie, we'll come to you first. Just very briefly, final comment, what do we need to change in a sentence or two?
It's just greater education awareness and economic financial impacts.
Hasan?
I think the standardization of the processes will help everybody understand what we're trying to do and where we're going.
Abdullah?
I would say beyond standardization only, but enforcing it through legislation, regulations, introducing those on institutions as well.
So on that note, I always like to finish with a quote, and today my quote is from Albert Einstein. The world as we have created it is a process of our thinking. It cannot be changed without changing our thinking. On that note, Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you.